All right, well, let's dive into the early phase trading for the IPO Advance Phase. And I shared with you on this slide what I look for the IPO base. So I'm looking, the characteristics that I'm looking for a base to start forming pretty quickly, because that's going to be signaling demand to me. Like, so if it can form a short base and then move out pretty quickly for that IPO Advance Phase, people are not really interested in selling the name. So I'm looking for that. Typically the IPO base I'm looking for, it can be pretty short. It can be 2 weeks or longer. And some of the patterns that I like to trade are the U-shaped bases, and I'm going to show you a few examples, what we've dubbed the hook pattern. And then sometimes they just form short consolidations or possibly even like high tight flags. I would trade those as well. I'm looking for strong revenue growth and liquidity. Those are so important because the stock has to have enough liquidity for me to be able to get in and out of the name. And also, I'm being selective. I'm trying to look for the next leaders. Okay, in terms of technical analysis, I'm going to take note of any tight action. That is rare with an IPO. So when I see it, I'm thinking accumulation. And similarly, I'm going to be looking for the price closes to be strong. While the stock may be volatile intraday from a technical perspective, I'm going to focus more on how it closes. And I'm going to pay attention when I'm trading this phase, I'm going to pay more attention to daily charts, just a faster time frame. And the moving averages that I'm going to be using are typically the 21-day EMA if it's there already. And if it's not present, then the 10-day simple moving average. While a shallow correction is ideal, it's rare, right? Because IPOs are more volatile. But if I see that, that's going to be a plus. And also, I'm going to consider the market environment. If we were in a bear and the IPO base was forming during a bear, then I'm going to give that more leeway because I'm going to expect a deeper consolidation. I'm going to be watching for liquidity to pick up as well as it tries to come out of the IPO base. And successive days closing up, I would say Google is a perfect example of that. Alphabet back when it first came out. If you want to study that pattern, you can just see the accumulation on the right side as it tries to come out of its base. And one thing I look for on the technicals, and I look for this in any base, even on mature stocks, is I want to see a faster recovery than a decline. So let's say if the stock's correcting for a couple of weeks, then when it starts to reverse and come up the right side, I want to see that left side price taken out very quickly, faster than the left side decline. Now, that's not always present, but when I see it, these are all positives. Okay, so the first example I have for trading the IPO Advance Phase is Mobileye. I'm not going to go through my trades in detail on any of these examples. I did go through a lot of detail in the IPO Masterclass, but what I wanted to focus on today to show you is just how these IPO Advance Phases behave. Now, I did trade this name. It's one of my most successful trades this year so far, and I am not currently in the stock. Okay, so I want to show you the hook patterns here. There's an early hook pattern here, and then there's a second hook pattern, okay? And typically, when I'm looking for this U-shaped pattern, it tends to coincide as well with the moving averages. So if you look here, the 21-day EMA, the 10-day EMA, those are other moving averages you can use to get positioned. So what I'm trying to do in this phase is I'm trying to get positioned near the turn early because these names are so volatile. Take a look at this. It's very easy to get stopped out. And I get stopped out regularly. So when I'm starting to get positioned, this is why I keep my stop losses very tight risk management. When I'm trading these types of names, my expectation is that I may get stopped out once or twice before I get positioned. So that's normal. I wanted to point out here, just because this is still on the watch list, whenever I trade a name that was successful in the IPO Advance Phase, I keep it on a watch list and I'm watching it for later to see if it can come out, go through some type of consolidation, and then move out. So this was very interesting. This was that huge earnings gap, which was terrible, right? But look at the close. So that gets my attention, the fast positive reversal. Let's see what it can do now. I would say it's still in the IPO advance phase, but I mean, it did have obviously this little aberration, but it had a nice strong positive close. So I'm watching it. We don't know what it's going to do, but it's one for the watch list. Okay, here's another name that I wanted to show you in terms of the IPO advance phase. Very quick. One thing that you can see from all of these examples is they run up quickly and then they correct quickly. So another hook pattern, a trader could use that to start to get positioned and use the moving averages and get a little bit of a lower cost basis to withstand these kind of pullbacks. While they just look like blips on the screen, these are, some of these are pretty wide swings. So that's why during this phase, I want to get positioned with a lower cost basis. And I'm going to try not to add to the position. I don't want to raise my cost basis. So you can see how quickly this move occurred, kind of like an island top, right? It never hit that price again during this phase, at least for now. And then it gave back the entire move. Again, typical. So that's why these faster rules are more successful in this phase. And you can see all these examples. That's why I put these examples together for you today. Now, whenever I trade an IPO advance phase, or even if I don't, and I see that it had one and then kind of corrected and is starting to go down to sideways. Now, this is pretty severe, again, because of the bear market. I'm going to be watching this and putting it on a watch list. And what I'm looking for is, first, usually this length of time, I'm being patient. Usually it's 6 months, 18 months, maybe a little longer. And then I'm looking for a constructive first mature base to form. So with a rally before that. And then you could see with ON holdings, it did stage a breakout here from that first mature base. So now I'm watching, I'm not in this name currently. I did trade it before. So now I'm watching to see what it does here. Is it going to create another base? No one knows, right? But it's on the watch list. Okay, Airbnb, very similar, trading this IPO advance phase if someone's trading them. Again, the hook pattern could be used here. Look at this volatility. That's why, trying to buy regular breakouts during the IPO advance phase is very difficult. And the odds of being stopped out are even higher than some of these other entry points. Again, you can see, at least in my experiences anecdotally. Okay, you can see that it gives back the entire run and it's pretty fast. Negative reversals I'm pointing out, I watch for those. When I'm trading this phase, I'm looking to sell a lot into strength and I'm using the shorter term moving averages. I don't know if I pointed those out. So this light green is a 10-day, the magenta is the 21-day EMA, the red is 50. This wine colored, I don't really use it that much. I put that on there, but that's the 50 EMA if anyone is interested. Okay, and this gave back the entire move. Again, so now going through an institutional due diligence phase after this advance. If it ever gets up to this spot again, it would get some turbulence there. So I always mark that. And now it's, attempting a first base. We'll see what it does. Okay, the next example is Palantir. One thing that's unusual about Palantir that I wanted to mention is that it meets the qualifications or met the qualifications for a rare jewel during its IPO advance phase. And we talk about that in our book in more detail, but basically it's a move that occurs over 100% move within 90 days. And what that does is that puts the stock on a special watch list to watch the institutional due diligence phase. And the reason for that is that we found in our research that these stocks are more likely to increase and have a bigger move, but not all of them. So usually it points to maybe one or two leaders. Like if you think back and look back, I think Twilio was on that rare jewel way back when, and some other names. So some of them will not work, but it does create a good list for the watch list to keep an eye on to see if they can move out. Okay, so you could see here with Palantir, it created this small little base, which almost looks like some type of cup and handle, short little IPO base, and then had quite a run. I mean, it did have this negative reversal, so more than likely a trader would get taken out there, and then it does make another high before rolling over. And it's been going through a due diligence phase for some time now, right? More than 2 years, along with the market. And then it tries to rally off the bottom and has this little maybe double bottom kind of base that forms, and it does break out from that. So I do currently have a position in this name. It's on theme for artificial intelligence, and I just wanted to show you that volume that came in on the daily and the weekly. A couple of things that catch my attention. First, it's on theme, which is a strong theme, the artificial intelligence. And also, it stages a very strong gap on earnings. So on May 9th, it had a powerful move over 23% and 562% gain in volume. So typically, some institutions are starting to take notice when you see that kind of accumulation. And if you look at the weekly, this is the weekly chart, you can see the number of weeks. Of course, here, it's extended now. And I'm not sure if you could see this on the weekly. If you look very closely here, there's a line where there are some pretty tight closes in there weekly. So that always catches my attention before this kind of final shakeout, before the breakout.